All right. Good morning, everyone. We got the chat put up there, so you can drop a comment in there when you jump on. Hope everyone had a great weekend. And we are back at it. Feel free to drop a comment there in the chat. Lisa, good morning. Good morning, everyone that commented before we went live. And we'll get started in just a minute. Just waiting to go live on all the different platforms here. Give everybody a chance to jump on here. Melanie, good morning. Good morning, everybody checking in. All right. Okay, looks like we can get started. We are live on all the different platforms. So we'll go ahead and take away the chat there, and then we will get into it. All right. So welcome, everyone. My name is Kyle Hiersche. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. What we do every day here on this show is go over the live interest rates. We're going to pull up actual interest rates for today, which is April 10th. And we will check out what the market is doing compared to last week as well. Then every day we go into a deep dive on a different topic, and today's topic is 5 to 8 unit properties. Now, at the Mortgage Calculator, we specialize in non-QM loans, so this is right up our alley and something that we do quite a bit of. So Jose will go through a deep dive into that in a little bit, but before we do that, Nick, let's go ahead and pull up our pricing tool that our 300 loan officers use, and let's go over the rates today.
All right, thank you, sir. Let me go ahead and switch my screens and we'll get started. So as Kyle mentioned, this is our pricing tool. This is for our team of mortgage professionals, and we'll just show the pricing indications for today. It's April 10th, 2023, just after 11 a.m. So most of our standard programs are all published now with new live rates for the week. But if you'd like a full loan estimate, please get with one of our team members. We have over 300 licensed loan officers in 22 states for primary and second homes. And we can do our business purpose loans, which is going to be our topic later today on our 5 to 8 unit properties in about 44 states. So pretty much every state. So for our pricer here, we're going to set up a simple example as we do every morning and run that through all of our different loan programs. So we'll set a $400,000 loan amount. We'll set an LTV of 80% loan, 20% down payment. We'll set the desired price to 99. That means the computer will find the best rate at one discount point approximately in cost. Most of our customers are asking to buy down the rate a little bit, so this is the typical request. We are going to do our 3 most popular programs. We're going to do our conventional programs first. Then we'll go through our FHA programs. And then we'll go into expanded guidelines, aka non-QM, where we have over 5,000 additional loan programs that can use alternative income and a bunch of other different tricks. We do have VA available. That's only for our eligible veterans. So if you are eligible, please let us know. We'd be happy to quote it, but not everybody is eligible. So we don't do that live. And same with USDA, it must be an eligible property. So if you're shopping in a rural area that's eligible, please let us know and we'd be happy to quote that as well. Let's start with our conforming conventional rates. We're going to set up a standard purchase, 30-year fixed, primary home, single family, 1 unit, state of Florida, county Miami-Dade. That's where our office is. And for all of our demos today, we will use an estimated FICO score of 760 and an estimated debt to income ratio of 40%. So with all these standard parameters, let's check out our conventional rates this morning. So here it looks like the best option is the first option here, 6.5% rate for 0.875 discount points and costs, and a final APR of 6.672. So a little bit higher than it was last week, but obviously much lower than the last 6 months plus. So great options here. Conventional loans are coming down in cost. We love to see that. So now if we go back to our quick pricer, if for any reason a customer is not able to qualify conventional, most times, sorry, let me click this, the next best option will be an FHA program. So we'll select FHA. Everything else will stay the same. FHA does allow a little bit more leniency on the credit guidelines and on the debt to income ratios. So this is usually the next best program. And with everything else staying the same, let's check out our FHA rates this morning. So, some good options here. 5.625 rate for one discount point in cost for a final APR of 6.227. So, when you compare that to conventional, remember FHA does have upfront mortgage insurance and yearly mortgage insurance. So, you see the APR difference there is a little bit higher. So, always compare APR. And you see the actual APR is lower than conventional. So, again, we love to compare these options for borrowers that qualify for both. FHA typically traditionally was more expensive. Now with some recent changes, FHA is actually cheaper in this scenario. So definitely recommend our borrowers out there check out both our conventional and FHA options to compare. Now, if for any reason our customer doesn't qualify for either conventional or FHA, many other banks and lenders do not have any other loan programs available. Fortunately, here at the Mortgage Calculator, we specialize in non-QM, aka expanded guidelines here, and we have over 5,000 additional loan programs available for our customers. So we'll set up the same scenario, 80% loan to value, 20% down. Everything else will stay the same. However, now that we've selected non-QM, we have a new option pop up for income verification. So typically, if our customer is not able to qualify FHA or conventional, that's because 2 years of tax returns are required for a full doc loan for FHA and conventional. So we typically select expanded guidelines or non-QM to use alternative income documentation. So 1 year alt doc, 2 year alt doc, very popular. Asset related programs are popular. We can use business bank statements. We can do our DSCR loans, which we'll talk about here in a minute for our investment properties. But our most popular program by far when we go into our non-QM is our personal bank statement 12-month program. And that's for our self-employed borrowers. Many times our self-employed borrowers with 2 years of tax returns have various write-offs and have issues qualifying. Maybe they don't qualify at all or don't qualify with enough income for the property they want. Therefore, we're going to instead use 12 bank statements, the last 12 bank statements, to actually get their cash position and determine their debt to income ratio based on their actual cash in the bank, and use that to determine a debt to income ratio rather than their tax returns. So many times our customers, especially the self-employed, will qualify where they wouldn't qualify before or qualify for much more income and therefore a much higher loan amount, which they're seeking. So let's check out our non-QM rates this morning. And remember, these rates are going to be a little bit higher because they're for customers who would not otherwise qualify. But the best option we see pop up here, great option, 7.25% rate for 0.75 discount points and costs for a final APR of 7.322. So remember, the conventional loans was in the mid-high sixes there, and now the non-QM is in the low sevens. So very comparable programs. Recommend our borrowers consider each conventional, FHA, and non-QM. Great programs for anybody out there. And our team is happy to quote all three for anybody that's potentially out there looking at the different options. Now, before we go into Jose's deep dive example, we always want to do the live investment property rates. So we'll do our two last scenarios today for investment properties. We'll set up the same LTV, 80% loan to value, 20% down payment, 400,000 loan amount, desired price of 99. We're looking for the best rate at one discount point in cost. And we're simply going to compare our two investment property options, which will be conforming conventional and our non-QM options. Remember, FHA, VA, USDA are not eligible for investment properties. So we'll set this to conforming first. Everything else will stay the same as all our examples before. And let's check out our investment property rates this morning. So when we switch to investment property, Fannie Mae, Freddie Mac, the GSEs that are in control of these programs have added additional loan level price adjustments or fees. So unfortunately, the computer is not able to find a rate with one discount point in cost. The best option here when we compare APRs, the computer found was a 6.75 rate for 3.25 discount points in cost, which is quite a bit of money here for our investors, $13,000, for a final APR of 7.001. So great APR there for our borrowers that do qualify conventional, but many times our investors would like to get less discount points. So in this case, $13,000 would be better deployed for many of our investors in other investments. So our investors would like to have other quotes. That's where we love to quote non-QM. If we cruise down here and go up in rate a little bit, you see there's some other options to go to 7.625 for 2.375 points, but that's still quite a bit of money. So we'd love to compare our non-QM options for our investors out there that will have options at one discount point cost and a little bit higher rate. So for our final example, let's pull up our investment property, 80% LTV, and switch this to expanded guidelines, aka non-QM, for investment properties. Now, for this example, we're going to have two different options that pop up for non-QM investment properties. First, income verification. As I mentioned before, the investor DSCR program is only for investment properties, and that is our most popular option by far. That is because there is no employment or income required from the borrower. We're simply going to use the estimated rental income from the property we're purchasing in this case in order to determine if that estimated rental income can cover the PITIA, the mortgage expenses of this mortgage we're proposing. So very simple here. The calculation, as long as the property cash flows, is greater than 1 DSCR ratio. If the property doesn't cash flow, that's a DSCR ratio lower than 1. We have options for both. Now, the other option we have to select is a prepayment penalty. We always choose 3 years is standard for a non-QM investment property. We can choose 0 if that is our choice, but that will limit our loan programs and cost more money. And we could also choose 5 years if that's our choice, which will cost less money, but that will limit our loan programs because not every loan program allows 5 years. So 3 years is standard. That's what we always use for the show every day. And let's check out our DSCR rates this morning. So we love to have these rates in the 7s. So this is a great thing. Obviously, we love to see the non-QM go down as well as the conventional. So great option here, 7.625 for even under 1 discount point cost, 0.975 discount points for a final APR of 7.705, which is pretty amazing there for a DSCR example. When you compare the conventional, we're just in the 7s as well. So we love to offer these options to our investors. Obviously, a much easier loan. Our investors often can do a cash out refinance on multiple properties to purchase multiple other properties. So with this loan, we can start 5, 10, 20 different loan applications the same day for an investor with multiple properties. So very popular programs. You see a lot of different options here on the DSCR values and prepayment values. Please get with our team so we can find the option that fits best. Some of these may allow short-term rental income. Some of these may allow credit events such as a foreclosure, bankruptcy, but there's hundreds, even more than that, options here under the DSCR program as we flip through all of the different options here. So please get with our team. We'd be happy to quote those for you and allow you to compare across the programs. So now let me get ready for our deep dive into a very specific DSCR product. So let me change my screen real quick. And our topic for today, the deep dive, will be our 5 to 8 unit properties using our standard DSCR loan programs that you just saw. So you saw there's hundreds of different options under DSCR. There are a very small subset of those programs that do apply to 5 to 8 unit properties and even mixed use properties. So these are what are traditionally called a small commercial property, right? Anything over 4 units is a commercial property. But fortunately, with these new programs, we're able to use a standard DSCR program for our what was traditionally called a small commercial property. Now we're considering them almost the same as for other multi-unit property that is more traditional. So let me go ahead and pass it over to Jose, our sales manager with 27 years of experience, done quite a few of these multi-unit properties before there was these cool DSCR programs in the traditional world, and also now with our new programs. Jose definitely has some tips for our team out there and for our borrowers looking into multi-unit properties. So if you're ready, Jose, go ahead and take it away.
Yes, sir. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. With our hybrid program that we have for these 5 to 8 unit residential properties, we're definitely seeing a big improvement over what the rates that we used to be able to get on these properties when we were doing them strictly commercial. Another big advantage of this option that we have for these properties is that we do not have to be worried about the zip code and population density, because when we're going on a pure commercial option with these properties, the first thing that we get asked is, okay, what's the zip code? And then they look at population density, see if that's even going to work. Now keep in mind, we're not referring to if the property is rural in nature, because that is a totally different consideration for the loan of it being rural or not. What we're talking about here is simply population density, because you could have a property that's not located in a rural area but still be below the required population density per square mile for a commercial loan, and then they will not do the loan. However, with this program that we have, that is not something that we have to worry about. So not only do we not have to worry about population density, but we get great rates, as you're going to see right now. This program does use the residential debt service coverage ratio program options that we're looking at. So they're going to review these properties in pretty much the same manner that they're going to review the 1 to 4 unit residential properties, right? They're going to not be, this is not for the mixed use option, though. I will state that is going to be for another show, but this is for the residential only, uh, which is 100% residential, no mixed use at all. So in our first option here, we have 25% down, 75% LTV, which is the
Can you
maximum.
can you zoom in a touch, Jose? If you're explaining.
Sure. Yeah. This is the maximum LTV that is possible with this program. So here we're looking at, now, if you'll notice here, if you were looking at the DSCR rates that Nick was showing earlier today, you will note that these rates are actually lower. These DSCR rates are lower than the 1 to 4 unit DSCR rates. This is a very special program that we have here. So everyone should really be taking advantage of this 5 to 8 unit option. If you're considering a 1 to 4 unit property purchase, maybe you should look at a 5 to 8 unit property purchase if the extra price doesn't set you back, because this is an amazing option. 8.125 has a slight cost of $375, with the lowest rate option being 7.5 at a cost of 97.50, which is roughly 2.25 points. So really good option here with our 740 plus credit score program. Now we do have an option for this same uh, type of rates, a little bit higher at a 720, little bit higher. You'll see. Let me pull the other one back over. Whereas we had 8.125 here was our lowest cost option. At a 720 credit, we're looking at 8.25 as our lowest cost option, with 7.75 as our lowest rate option. So now, mind you, this is a very special option that we have. Does require a 5 year prepayment penalty, does require at least a 720 for this option, 740 for the others. Now, if you do have a borrower below those credit scores, we do have options, but then the rates are going to be much more in line with what we would expect normally for this product. Look at this option, say 12.125% rate at a cost of 3 points loan discount. So now you see, in this type of a situation, I would strongly consider that credit simulation be reviewed to see if there's any way to bring the borrower score up above to a 720 or above, so that you could really then benefit from this option, right? I mean, look at that, 8.25 is the highest rate, versus here 12 and an eighth is the only rate option that we could really offer here and still be in compliance. There was a couple of lower rate options, but we cannot buy them down because the cost is too excessive. So definitely you're looking at here amazing options for purchasing 5 to 8 unit residential units. I don't have any quotes for you today for refis, but the refi is possible. It is just a 5% LTV reduction if you're still at the same credit score. So very good options here, 5 to 8 unit residential only.
Awesome. Doesn't look like we have a question specific to the 5 to 8, but here's a good question from Jason. In general, do we have interest-only products? We definitely do. Do we have interest-only ARM products? We definitely do. And typically, what I would suggest for the interest-only product is not an ARM. I would suggest the 40-year fixed interest-only, which is a 30-year fixed loan with a 10-year interest-only period. So if you look, I don't ever do it in the live show, but we can do our standard DSCR program, typically with a 40-year term. And the interest-only portion is the first 10 years, and then the standard 30-year fixed at the end. That's the most popular combo to improve cash flow and obviously improve the DSCR ratio, which is a cash flow measurement. Anything else you want to add on that, Jose?
I would want to just tell the MLOs and borrowers out there to be careful when considering ARM products. Make sure that there is a nice spread between the rate on the fully amortizing product and the rate on the ARM, because right now in most options that we're looking at, there's only a 0.125% difference in the rate between an ARM and a 30-year fix. So I don't really think that's enough of a spread to put up with the risk of having that ARM. Now we do have in our foreign national option loan, we do have a really good 7-1, 5-1, and 3-1 ARM. That's the only one that I've really seen out of our options out there that really has an ARM that is substantially lower than the fixed rates. But other than that, really have to analyze the spread.
And again, these great DSCR programs have that benefit of they slap on a 10-year interest-only period to make the cash flow work, and it's a pretty standard loan. You don't have to go into the ARM world to just get the interest-only feature. If that's really what you're looking for is interest-only to increase the cash flow, you don't have to go with the risk, adding an extra risk of an ARM. But great question.
All right. I think we can go ahead and wrap it up then. I don't see any other questions. So, this is a perfect example of what we do at the Mortgage Calculator, programs like this. And as you can see, it helps to have somebody walk you through this, right? And so at the Mortgage Calculator, our loan officers not only do conventional FHA, VA, USDA, but we also specialize in non-QM. And our loan officers are loan consultants that can walk you through this process, just like Jose did, show the different examples and figure out what works best for you. So if you want to connect with one of our loan officers, you can visit us at themortgagecalculator.com. You can send us an email, info@themortgagecalculator.com, and we can pair you with one of our 300 loan officers. We are licensed in 22 states, and these programs, like the 5 to 8 unit program that we're talking about today, we can do in almost every state. So go ahead and connect with us at themortgagecalculator.com. Thank you, Nick. Thank you, Jose. Thank you, everyone, for tuning in. And we do this show at 11 a.m. Eastern every weekday, so we hope to see you all tomorrow at 11. Everybody take care.
Thanks, everybody.
Thank you, everybody.